Hey everybody, welcome back to Ryan Makes Sense. Today we're going to be looking at SoundHound AI, that is ticker symbol SOUN. We're going to see if the stock deserves to be at $5.50. Does it deserve to be lower? Deserve to be higher? We're going to see what institutions and hedge funds are doing as well. And we're going to do some advanced charting on Think or Swim to look for potential support and resistances, maybe some advanced patterns. We don't got much of a time frame to work with, but we'll make the best of it. So without further ado, let me shrink my head and let's get this party started, baby. All right, that's pretty good. All right, the stock used to be around 20. Let's see, what was this? $18 was the all-time high. $18.14. Got as low as $1. Now it's at 5.50. Recently went from $1.60 to 10.15. Now we're back down to 5.50. I mean, this looks like it is with the bulls. I mean, look at this. We have this bullish candle right here. It is with the bulls at the moment. Okay, so what do you notice about these financial data points? I think the first red flag is they lose 110 million, but they make 55 million. They they're losing about double what they make. So typically that is not a recipe for success. However, it doesn't work that way exactly in this scenario. So their gross margins are 66%. So they're not spending 55 million to make 110 million, or they're not spending 110 million to make 55 million. Their gross margins show that this company actually has some good products, some good returns. So this 110 million could be from a one-off. We're going to go ahead and dive a little bit deeper and see what that is coming from. But this kind of alleviates my red flag worry at the moment. Quick ratio, extremely high, very low debt. Sales past 5 years, 31%. That is showing a resiliency. Institutions on 24%. We will fact check that. Really good gross margins. Profit margins, obviously really ugly at the moment based off of this negative 110 net income. Again, almost double what this is. So this will be 200%, almost. Shares outstanding and shares float are a little high for my liking, but it's a good company, it's fine. Recommend is a 1.29. 1.0 is the best recommendation that Finviz can give. It's quite shorted. It's quite shorted. So what I also see here is we do see a nice U-turn happening up and to the right. Sales are up and to the right. Shares outstanding also up and to the right. 2023, there was 254 million shares outstanding. 2024, 358 million. So over 100 million shares added to the pool in a year. Not ideal. 2023, we did 45.8 million in sales. 2024, the trailing 12 months, we were at 55 million. So the company looks like they're on track to at least potentially have 10 million more in sales from 2023 to 2024. Decent. So let's go ahead and run our numbers and see if we can come up with a potential stock price. We do include the market cap if it is over 1 billion. In this case, it is. So 1.97 billion in market cap. Income is negative 110 million, 160,000. Sales 55 million, 470,000. All right, let's go down to check out the data points a little bit more. Again, not much data. They did 13 million. See, their gross profit is going down because they're spending more. They're spending more money to grow their sales, but you can see like Q3 2024, they made 13 million, but they spent 3.59. Q2 2024, they made 13 million, but they spent 5.26. And their gross profit is much lower than what it was Q3 2023. So A little too early. I mean, they're trending in the wrong direction in terms of profitability. It's just getting worse and worse. EPS, all negatives. We don't really have any other time frame to look at, unfortunately. Gross margins 58%, 54, 77, 72. So really high margins. Just the revenues are just kind of lackluster. On we go with our calculation. They do have a lot of money just chilling. Hopefully they're getting that money, put that money to use. They have 200 million, 160,000 in cash. Total debt, they have 2 million, 170,000. That is fantastic. Total assets 266 million. Total liabilities 42 million. So assets dwarf liabilities over 6 to 1. So every one liability they have 6 assets. So that is really good. Wow, their liabilities went down 90 million. Assets only went down 20, about 21 million. That's pretty good. That's a huge efficiency right there. Okay, we got a lot of people selling. I'm not seeing any stock options, just straight selling. Um, if the stock was at a deep discount, I think we would see some buying. If the stock is overvalued, we'd see some selling. So that's that. Um, I mean, they just need some sales, man. Like this is looking really efficient, and this liability, whatever liability they had that they got rid of, that was huge. That could really clear the path for them going forward. That could really help them. So we don't like this net income continuing to grow. We need that to get to zero or positive. Based on this, it's going to take years, maybe. We'll see. But not really, not really attracted to this stock. I mean, it's got good momentum if you're a momentum trader. Okay, so now we're going to take this divided by 358,730,000. So we get a stock price of $5.89. The stock is trading at $5.50. Um, I mean, the trend is showing that there's likely going to be a move continued higher, but this is just going to continue to get worse. And their sales are going to be flat-ish. Um, yeah, and their profitability, they keep spending more money to make the same amount of money. This is definitely a wait and or just a hold on the side. Just watch. It's really attractive with their debt and the cash, but this profitability and the net income is really ugly. Their sales are really ugly. But I mean, they are expected to grow next year 39%, which would put them at, if they do 55 million this year, that would put them at 15, close to 70, 72 million in sales for 2025. And again, we're still not profitable by then. Um, so is this a risk here? I think so. We'll take a deeper dive in a second on potential supports and resistances. Institutions own 24%. However, the trend is your friend here, and the momentum is saying go higher. I think institutions are probably buying here. So old data says 24.8. New data says 28.58. So about almost a 4% increase. We can see almost all-time high ownership rate here. See what the big money doing. BlackRock purchased 12.3 million shares April of this year. Vanguard purchased 13.8 million shares this year, February and April. Let's see. Ooh, so they bought potentially at the all-time highs for this past year. Oof. So they might be about even or down a little bit. Um, Commonwealth decreased their position. Just looking for big shares. Raymond James decreased. Morgan Stanley decreased. New position. Good. That's a big position. Carnegie Capital, 899,000 shares. Crazy. 156,000 shares, 276,000, 101,000 shares, 2.98 million. Fidelity increased their position 117%. Wow. So Fidelity is going to be up with the big boys and girls, I think. Maybe not. Not yet. So, yeah, I mean, this has momentum to it, but again, the negative, they're just going further and further away from profitability. They added 104 million shares from 2023 to 2024. Ah, drink some water. So, let's look at some price targets. This is going to be the easy, not that. We're going to go for the low-lying fruit first. All right, so the obvious potential price target in the short term is gonna be, oops, I'd say about $7. We're gonna see this bad boy, the momentum go whoop. Maybe there's gonna be some fight here and it comes back down. So there is that. We also have this. This is also um, a possibility. This this $5 area seems to be where it's kind of like a magnet, and I'll show you what I'm talking about. So the stock typically finds consolidation, support, or resistance here. So if we look over here, we can see it bounced up, falls through, tests it again, tries, tests, breaks up, comes through, goes above, falls below, goes above, and it just kind of chops sideways in this area. Um, the only reason I could see it getting below this area again and below, let's go here. Below here is if their net income again continues to go even more negative, which I think it will, and sales don't really grow. They are expected to grow, but at what cost, really? Like they could say, oh, we're going to make $100 million in revenue 2025, but at what cost? So I think it would be good because it would help their brand, the stickiness of their brand. People would be like, oh, SoundHound, 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 SoundHound. It would be a common household name, maybe. I mean, to some people who use the product or are familiar with, that industry. So, I think we'll see sevens. I mean, unless it has a huge breakthrough, maybe it can continue onward. We do have a potential cup and handle with the left side right here, right side right here. We've got our handle pullback in this area and then a move up. But again, we just have to see how the company goes. They do have enough cash. Their debt is very low. Huge efficiency from Q1 to Q2 this year. Again, they got rid of, I think, let's just go back and double check. Their liabilities went down about 90 million, and assets went down 20 million. That's pretty fantastic. That's a huge efficiency booster right there. So again, we'll see some. some action, I think, over the next year, but momentum has this stock at the moment. So, I mean, again, we could see this probably go to sevens. Um, and that's really all I've got for you guys. If you made it this far, consider subscribing. I appreciate you for watching. Take care.